welcome to the video. It's SOFI Wednesday. Big picture if you don't want to stick around for the whole video. I'm still super bullish on this one. I think 2025 is going to be banger for it. In this video, we'll talk about the daily and weekly price action so we can get a feel for when price can move, where price can move in the short term, long term. This will help us identify where we're going to add, where we're going to trim in line with our risk tolerances, and it's going to keep us a level head whilst the market's choppy. We'll also talk about the open options interest. This will give us a feel for what the big boys are doing with the stock and the market makers. Other than that, we'll touch on some news, and finally, my eToro portfolio is going to be linked in the description down below. Okay, so straight in at the chart, obviously the whole market's been selling off. Most charts look like a piece of garbage for the last 2 days. But we will have a look, see what we can see. So we've got this nice double bottom here, kind of lining up with the fib, which I really like. And we had a pretty strong bounce off it, actually. And we're up pre-market again, probably 1 or 2%, about kind of 14. Now, it'd be good if we can stay above there. We've got that little bit of volume support there, but a fall below here, below this double bottom, is going to be quite a rapid drop to 1227 kind of area where we get a little bit more volume, a little bit more historical support. Now, most people will say they don't want to see their stocks go down, but I actually really love it, because if I love a stock, I'm always happy to buy it cheaper, especially when I don't agree with what the market's kind of pricing in overall. And a lot of this kind of fear is driving retail and liquidation and stuff like that. So I'm happy to buy into that weakness. So support to the downside again, it's going to be that level we just talked about, 12 kind of 30, and then slightly below that we've got the Fibonacci level. That's going to be a bit better support. That also lines up with that volume shelf there, which I love. If price got below that, I would be shocked. That would be an absolute steal deal. But resistance to the upside, again, we've got that little dip in the volume there at 14.54. And then above that, we're going to be sticking around this volume shelf where we've chopped around a lot at kind of 15.84. The bull market support band has flipped bearish, which isn't great. It is what it is. It's chunking out a bit, but I think if we do get a market bounce, it will recover quite quickly. Obviously, we'll talk a bit more about the macro and what's happening with that in a minute. RSI, nothing spectacular. It's getting kind of negatives. There's no real divergences forming on that or anything yet anyway. Certainly invalidated it, because there would have been one if we didn't continue dipping. The MACDX Plus indicator, we had the overbought kind of signals, which generally coincide with where it's going to roll over. If you look historically, they're normally in the ballpark, so we knew things were going to come. We just didn't know the sell-off would be this cray. And the flow indicator is kind of bearish looking. Let's look at the weekly. Oh, let me zoom in a bit. Put it up here. My machine's a bit laggy. Should have probably rebooted, I think. Okay, so again, this still looks pretty good. We've got a really nice volume shelf here. The volume gaps below don't look so bad, but again, that gap here does not look ideal. There's not much purchasing being done there. The RSI is kind of neutral. So weekly looks a bit more, it could go either way. So we just kind of need to wait for some confirmation on the daily. The MACDX Plus, institutions still living it. Still looking good. And the flow doesn't look as bad on here as well. Other than that, though, my price target still is about $21 for end of year. I think the company's executing fantastically. Fundamentally, they're really strong. Obviously, the tech side is a little bit lagging, but they've kind of explained to us why. And I did want to point out that I did forget to do my Q4 analysis for SOFI. So there's just been so much going on, so I'll work on doing that at the weekend. Other than that, kind of, it's trading around where I would expect it to trade, kind of between 14, 16. I think that's where it's going to hover. I hadn't planned to do any trimming or adding, but as I mentioned in yesterday's video, I'm coming into some money, so I'll be making a big deposit on the 1st. I hope the market stays depressed so I can deploy some of that money in quite an aggressive manner. My worst nightmare right now would be the market pumps into the last few days of the month. That would be wounding for me. Moving back quickly to the daily chart, though, I did want to point out there was a very ugly looking head and shoulders pattern here. Shoulder, head, shoulder, measured move for that. If I can find my little pen. kind of not great. That would be an absolute catastrophe to get back in the $10 range. But personally, I would love to buy more there. So again, when you've been investing for a while, you tend to be more excited about downturns than bull runs. It's just that's where the opportunity is. If the market always went up, the moves wouldn't be as big. You want that volatility, you want that chop. That's where your edge is. Don't confuse that. Looking at the options though, price didn't get low enough for market makers to want to pump it up, which is nice. We did get to the bottom of the expected measured move though. The expected move, should I say. Resistance currently sitting at $20. But for the most part, this week, it's going to chop around by the looks of it. That most of the bearish and bullish volume is kind of in the what we talked about, the kind of 13 to 16 range, with peaking out at 17. 17 is going to be the Mac Daddy to break. Don't see that happening with the macro how it is though. Pushing out a week. Volumes dwindling away, less people interested. Things getting a bit fiery out there. Pushing out again. So this 16 is going to be a tough one to break over the next few weeks, but the measured move there, I keep saying measured move, I want to say expected move. That's what I want to say on that one. Expected move there is quite large, so some people are expecting some good stuff. I hate how this stupid alert thing keeps coming up right over the buttons that I need. So let's push it out to 2026, which I'm expecting full year 2026 to be super good for this company. See what the big boys are thinking. Okay. Pretty good. Kind of aligns with what I'm thinking year end. I got $21 as my kind of price target for it, and the market's kind of thinking roughly the same thing. We do have these legacy ones here as well. Push out to 2027. I'm guessing people be just giving themselves more time, but the same prices. Yeah, it looks like it. So again, it's going to be one of them companies that I think people are expecting steady growth for, nothing crazy. But sometimes it's good to have one of those in your portfolio. And I think this company is going to be in my portfolio for many, many years. It's going to continue to take market share with younger customers when they start coming into money and stuff. Okay, so I couldn't find too much SOFI news. Alejandro, I think he's the guy that runs the visual charts kind of platform that I use. Really good. I love to look at my data visually as well, so that really helps me. He's just pointing out that SOFI sentiment is in the absolute trash, which I actually really like. I don't want to buy stuff that's been mentioned a lot online, because generally that means price is being pumped up. I want to buy it when it's in the gutter. I want to be contrarian. I don't want to chase the hype. I always want to get in before the hype, which a lot of people like to point out is wrong, but you know, it works for me. Find your strategy that works for you. Don't listen to other people. It's not one size fits all. There's plenty of ways to make money in this market. Also, I did put on there the Q3 earnings update on the craftytrader.com. I will do the Q4 one over the weekend. I just completely forgot about it with all the chaos that's been happening between holiday, my mum being sick and then passing, and all that stuff. But I did want to talk about a little bit of the macro, what's happening. I want to say I'm really happy that the 10-year yield looks like it's rolling over. The US is really getting its fiscal kind of policy in order, sorting out, its debt. That's going to make other countries want to buy its debt and not be lured in with these high rates. So that's going to work really well for my TLT and TMF plays. Super excited. Wish I had more. I hope it doesn't pop off too much before I get my deposit in there, because I want to buy more of that. I'm very excited for that in the future. And then also below, I wanted to show you the oil is rolling over again. We had this kind of spike, which didn't make much sense really. It is rolling over. I think it's going to break even lower, and that's going to be a really good deflationary asset, tool, whatever. Can't get my words out very well this morning. But other than that, we know housing is a really big driver. That's also falling. A lot of the main sticking areas now are kind of food and kind of in the commodity area, but we know that's going to happen with the shake-up from tariffs. Don't expect that to last. I expect to see that fade away, especially as the US ramps up its own in-house goods and whatnot. So I'm just reading off my list what I talked about. Unemployment rate is going up. I didn't put a chart on there for that, but it is going up. Obviously, we've got the government cuts, that's going to push it up, and the deportations, that's going to push it up. A lot of people seem to be in the mindset that a lot of the government workers will just take the more lower paying jobs. That's probably not going to happen. A lot of the government workers are going to be covered for the redundancy deal, so there will be a lull in the lower end. So the jobs numbers will come in worse than they are. Obviously, long term automation, robotics, and that will fill in some gaps, but that's going to take time. So I expect to see those numbers decline more. GDP growth expected to stay at 2.3%. Nothing exciting about that, but I mean, again, with the world thinking there's going to be lower productivity, that's not too bad. Inflation did creep up a whopping 0.1%, but expected to continue to fall when tariffs are excluded. I think I did put a chart for that, yes. The contribution to year-over-year core PCE, and I think it's that little red line. Now, the Fed should be paying attention to that number, not the other way around. Typically, they shouldn't include tariffs as inflationary pressures, and even so, they shouldn't be adjusting before it. They should be adjusting after it if they need to. So, in theory, that should be ignored. I put in oil and housing starting to come down, which is great. That's housing is a really big contributory factor to inflation, so that's good. Gas, I didn't like that. That was up 108% year over year. So maybe Trump needs to baby frack. Market prices, did want to talk about, obviously, the massive drop where the market was very leveraged. But I think we're probably going to get a bounce a little bit and then probably sell off a little bit more, which I'm praying for is the issue, because like I've mentioned earlier in the video, I want to use my deposit to buy more of these really good deals. I think the algos will start pushing lower if we do get another drop lower. What else we got? I did want to talk about, everyone's talking about all the sentiment readings we're getting, and everyone seems to be taking them as gospel. I don't know why. It's just a sentiment reading, guys. They're normally just a survey, and they don't normally consist of that many people. For example, I think it was the CEO sentiment recently came in quite a bit low, but when you read the small print on it, it's 134 CEOs participated in the survey. Are we basing our economic outlook on 134 CEOs? We don't even know the companies that they're coming from. Are those companies in financial difficulties and all that stuff? But then other surveys we've had, there's been a change in how they do them. They've gone from, the traditional way to just doing them online. So that changes the survey pool. And just take it with a pinch of salt. A good example is I put up here the cash levels that a lot of the hedge funds are using, the fund managers even. The cash pools are really low, but there was a fund manager survey that went out, I think it was last week or the week before, asking them were they bearish or bullish, and they all put bearish. Does having this size cash pile make it seem like fund managers are that bearish? I think they lied. So, again, take it with a pinch of salt. They're either lying, the base is small, or the base isn't the ideal kind of survey candidate. So something to bear in mind. Also, that chart, a lot of people are seeing that as a really negative. You want to be buying when there's a lot of cash on hand, but I'd be more interested to know why they're sitting on such low cash at a time when things are so bearish as they seem. So I suspect that is a bit more telling. So there's always different ways to look at things. Like I said earlier, you don't have to always go with what everyone else thinks. Did I talk about everything on there that I wanted to? I did, but I feel like it's quite chaotic. So if you have any questions, let me know in the comments below. That's a wrap. I hope you like this. I've been trying to make the videos shorter, more concise, get the information out a little bit faster. Tell me if you like it. Tell me if you don't. But share this regardless, and subscribe to the channel. And I'll see you tomorrow for tomorrow's update for PayPal.